Welcome, you're watching Kaleidoscope Srilanka Live News Capsule.
With a new president and a new parliament in place, Sri Lanka seems to be moving rapidly towards a new era of governance. But as we ready ourselves for a change in leadership and in policy, let's turn our attention towards the private sector. Here to discuss is Shiran Fernando, Chief Economic Policy Advisor at the Ceylon Chamber of Commerce.
What is the private sector's expectations of a new administration?
With every new government, the key point of contention is policy consistency, and that's something the private sector will echo every single time. But now, more than ever, is really staying on track in terms of the IMF program, completing the debt restructuring, so that the stability kind of continues in terms of the foundation that has been laid post the economic crisis from 2 years ago. And now we can look forward towards growth, and for that, a lot of reforms and things need to be prioritized to get towards that.
How do you see investment panning out, and what sectors are you foreseeing as having some growth?
So Sri Lanka's inherent issue has always been that we've not attracted good quality investment, and also investment that will spur exports and really lock ourselves with the value chains around us. And that's a lot of reasons. And I think what we need to kind of relook at is how can we improve the trade facilitation side of it, so that when investors come here, it's a plug and play situation. There is no issues at the border in terms of customs. Some of those changes happen and things are reformed on that side. Then the overall digitization story, because that's something that private sector would really like to see. Then labor reform as well. It's difficult with so many labor legislation that are there for investors to navigate through, and really modernize into the current way of work, getting empowering and getting more women participation in the labor force also, which is quite important as well. So a lot of these pieces really need to come together, because other countries are offering different things. It's a plug and play facility for a lot of countries, and we have to compete to be able to get those.
So, like you mentioned, when it comes to FDIs, we have fallen short considerably and continuously. Why is it that we do fall short and we just can't seem to compete in this region?
So if you look at countries like Vietnam, it was a 15 to 20 year program they kind of underwent to really be modern, to have that plug and play facility, to have investment zones, which even sometimes are managed by the private sector. You do kind of those reforms at the border, and then you go and do these free trade agreements which enhance market access. So Sri Lanka has somewhat of an advantage in terms of we've done some free trade agreements. We have the Pakistan one, the Indian one, and now the Thailand one, Singapore one will get activated. So there's access to over 2 billion. The location is something we'll always have. It's not going to go away. It's really how can we position ourselves to be an export center for South Asia, and namely India, and really plug into the value chains in India. Even it could even be South India. Oftentimes we've relied just providing either tax holidays or tax incentives to lure these investors. And if you look at a lot of the investments have either been non-export related, either infrastructure, real estate. A lot of those ones have really come in. Yes, some of those are needed, but now we need to be able to produce some of these assets need to be produce dollars, so that when we eventually have to start repaying debt at a considerable rate in 2028 and 29, we have the dollars that are coming in from these investments.
What is the private sector's sentiments on the second Trump presidency?
It's an interesting development, and you're seeing with the whole heap of elections that you've seen really incumbents losing, and the economy in focus, similar to Sri Lanka. I think with Trump 2.0, there will be more doubling down on the trade agenda, and the whole Make America Great Again, and really empowering probably American businesses. What that means is potentially a stronger dollar, which might not be the best for Sri Lanka. That might have a little bit of pressure on Sri Lanka as well. And there could be certain spillover impacts from certain trade things that Trump might try to do, in particular with China and the region as well. So we won't see a lot of direct impacts. We will see a lot of indirect impacts from the dollar increasing, maybe interest rates going up, a stronger economy overall, which might be good and beneficial for our exports. Sometimes apparel, rubber, they might benefit as well. So it could balance out. A stronger dollar might balance out with better exports to the region as well.
So, given that US is one of our largest trading partners, especially in apparel, given that President Trump's policies are generally very inflationary, how is that going to impact countries like ours?
So it'll be interesting to see the level of tariffs that they implement from January onwards, whether in particular for, I think the value chain focus is a lot of the time on automotive and things like that. So for example, if those rise up, will that kind of increase costs on the industrial side? So I think those need to be really looked at. Then the overall Indo-Pacific strategy, which I think we did see in his first term as well, how focused that is, and the role that India will play within that, and what does that mean for South Asia and for Sri Lanka as well. So I think from an economic diplomacy and foreign policy point of view, I think we need to watch out for these areas as well. I don't foresee too much of a focus on South Asia, except for this maybe Indo-Pacific strategy, and the real focus will be on China. So for Sri Lankan trade, I think we have to look out for hints of trade diversion. We did see in the first round of tariff increases, we did see some countries or companies relocating. Maybe if they had 4 factories, they would relocate one to another country, and Vietnam benefited in that instance. Can we now see some of that coming towards this part of the region and maybe towards India, maybe some spillover into Sri Lanka? So that's why what I said earlier, in terms of getting the framework right, getting the reform structure right, and then getting the growth story right, we'll be able to attract these investors who will potentially maybe looking to relocate or diversify the geographical risk.
If you like what you see on Kaleidoscope, please do like us, follow us and subscribe. We are on YouTube, Facebook, Instagram and LinkedIn.
You focus on your goals. We will take care of the risks. Ceylon Life.